All right, folks, we're going to look at the IWM Russell 2000 ETF, and basically what I'll say here on the Russell would apply to S&P, Dow, Nasdaq, and so forth. But a lot of people are surprised about where prices stall, especially when it comes to gaps and things like that. Now we're obviously got a huge another relief trade here, another taco trade, thanks to Uncle Donnie in the White House. And here we had a huge gap up. The Russell's currently just south of 3%. We're pulling back a little bit from the open, but we're not surprised at where prices tend to stall when we have gaps, whether it be from earnings, whether it be from headline events like we saw last night in the Asia session. And here is essentially where we are. We had prices have been stalling here into right at our other key zones to the downside, and then here the market has just been kind of sitting, waiting patiently for some type of decision, and then we ended up getting that gapping right back into our areas of supply. So here we are gapping right into this key 260 area. Now, not only is this a key level on its own, but it also has some additional institutional data confluence, and that is through the lens of gamma exposure. Now, gamma exposure, or what we'll refer to as GEX, measures the total amount of gamma that market makers, i.e. dealers, are exposed to, and where they will likely come in and defend or hedge their positions. So in a 7-day window or 7 days expiration, market makers will defend this 260 area as there's no incentive for prices to move much further past. Otherwise, they would start to incur losses. So here we are, we gap right to 260, where price is holding as of this recording. That is where our gamma call wall is sitting. And then if we move down, you'll see that this is where we also have a significant amount of dark pool activity resting at 260. So right now, because we gapped above 260, then that is naturally serving as an area of quasi support right now. But if we start to break down below 260, you can see how sticky this is. That's likely going to bring us back down to first fill the gap here at around 253 and then down to 250. So we use these other key institutional data points or levels to help give us an edge in our decision making. So we know from a technical perspective, this is where we are. This is where we expected price to stall and where we're actually looking for new shorting opportunities. But we also know that we've got huge gamma walls here at 260. And we also have dark pool activity sitting here as well. So just because we have a 2-week ceasefire does not mean that we still have a fully open strait. Each of the last 4 or 5 positive sentiment messages we've received, calm markets produced a relief rally, but just note that each one of those was short-lived. So stay tuned, manage your risk, and we'll see you on the next update.